The U.S. economy in 2025 presents a mixed bag of challenges and opportunities. It's a landscape where growth and struggle coexist, painting a complex picture of the nation's financial health. We see continued growth in certain sectors, particularly in technology and renewable energy. These industries are driving innovation and creating new jobs, contributing significantly to the economy's expansion. However, while some sectors thrive, others struggle to regain their footing. The retail industry, for instance, faces ongoing challenges with many stores closing and shopping malls becoming increasingly deserted. Inflation remains a concern, albeit at a slower pace than in previous years. Consumers still feel the pinch at the grocery store, and economists continue to debate the best strategies to manage rising prices. The job market is strong, with unemployment hovering near record lows. This robust employment landscape provides a sense of stability for many American families even as other economic indicators fluctuate. However, rising interest rates cast a shadow of uncertainty over consumer spending and business investment. Higher borrowing costs can dampen economic activity, making it more expensive for consumers to finance big purchases and for businesses to invest in growth. The Federal Reserve walks a tightrope, trying to balance economic growth with price stability. Their decisions on interest rates are closely watched, as they have far-reaching implications for the entire economy. The global landscape adds another layer of complexity. International trade dynamics, foreign exchange rates, and geopolitical events all play a role in shaping the U.S. economic outlook. Geopolitical tensions and supply chain disruptions continue to impact trade and investment flows. These issues create bottlenecks and uncertainties that businesses must navigate carefully. The strength of the U.S. dollar presents both advantages and disadvantages for American businesses. While a strong dollar makes imports cheaper, it can also make U.S. exports less competitive on the global stage. Overall, the U.S. economy in 2025 is a dynamic environment, requiring careful navigation by policymakers, businesses, and investors alike. The interplay of various factors creates a landscape that is both challenging and full of potential, demanding strategic thinking and adaptability. The U.S. stock market in 2025 reflects the broader economic uncertainty. Major indices like the Dow Jones Industrial Average, the S&P 500, and the Nasdaq Composite show volatile swings. After a period of significant gains in the aftermath of the pandemic, the market has experienced a correction in recent months. Investors are grappling with a number of factors, including rising interest rates, inflationary pressures, and geopolitical risks. Despite the recent volatility, the long-term outlook for the U.S. stock market remains positive. The U.S. economy continues to grow, albeit at a slower pace. Corporate earnings remain healthy, and valuations are more reasonable than they were a year ago. However, investors need to be selective and focus on companies with strong fundamentals and a proven track record of growth. Not all sectors of the economy are created equal. In 2025, we see clear winners and losers emerging. The technology sector, which had been a darling of investors for years, has faced headwinds due to rising interest rates and concerns about slowing growth. Similarly, the consumer discretionary sector is feeling the pinch of inflation and reduced consumer spending. On the other hand, sectors like energy, healthcare, and utilities have outperformed the broader market. The energy sector has benefited from rising oil and gas prices, while the healthcare sector is seen as a defensive play in times of economic uncertainty. Utilities, with their stable earnings and dividend payouts, have also attracted investors seeking safety and income. Visualizations can help us better understand the complex trends shaping the U.S. economy and stock market. The chart below shows the performance of the S&P 500 index over the past year. We can see that the market peaked in early 2024 before entering a period of correction. Another useful visualization is a sector performance chart, which compares the returns of different sectors within the stock market. This type of chart can help investors identify sectors that are outperforming or underperforming the broader market. Section 5, Economic Dashboard, Key Indicators. To assess the health of the U.S. economy, we can look at a range of economic indicators. These indicators provide a snapshot of the economic environment and help policymakers, businesses, and individuals make informed decisions. Gross Domestic Product, or GDP, measures the total value of goods and services produced in the country. It is a key indicator of economic growth and reflects the overall economic activity. A rising GDP indicates a growing economy, while a declining GDP may signal economic trouble. The unemployment rate tells us how many people are actively looking for work but cannot find it. A low unemployment rate suggests a healthy job market, while a high rate can indicate economic distress and a lack of job opportunities. Inflation, as measured by the Consumer Price Index, tracks the rising cost of goods and services. High inflation can erode purchasing power and savings, while low inflation can indicate weak demand in the economy. In 2025, GDP growth is expected to be modest, with estimates ranging from 1% to 2%. This moderate growth reflects a balanced economic environment, avoiding both rapid expansion and severe contraction. The unemployment rate remains low, hovering around 3.5%. This low rate indicates a strong labor market where most people who want to work can find jobs. Inflation has cooled from its peak in 2023, but remains above the Federal Reserve's target of 2%. This suggests that while price increases have slowed, they are still higher than desired for long-term economic stability. These indicators suggest that the U.S. economy is in a state of slow but steady growth. While challenges remain, the overall outlook is one of cautious optimism, with gradual improvements expected in various sectors. Section 6. Crystal ball gazing, expert predictions for the future. Predicting the future is always a risky business, but economists and market analysts rely on a variety of models and data points to make educated guesses about what lies ahead. They use historical data, current trends, and sophisticated algorithms to forecast economic conditions. These predictions are crucial for businesses, investors, and policymakers who need to make informed decisions. The consensus view for the U.S. economy in 2025 and beyond is one of continued, albeit moderate, growth. This growth is expected to be driven by technological advancements, increased consumer spending, and a stable job market. However, there are also concerns about potential headwinds, such as trade tensions and regulatory changes that could impact this growth trajectory. Inflation is expected to gradually decline, but interest rates are likely to remain elevated for the foreseeable future. Central banks around the world are taking a cautious approach, balancing the need to control inflation with the desire to support economic growth. This delicate balancing act will be crucial in shaping the economic landscape in the coming years. The stock market, as always, is more difficult to predict. While some sectors may experience significant growth, others could face challenges. Investors are advised to diversify their portfolios and stay informed about market trends and economic indicators. Some analysts believe that the market has already bottomed out and is poised for a rebound. They point to strong corporate earnings, robust consumer spending, and positive economic indicators as signs of a potential recovery. However, this optimism is tempered by the uncertainty surrounding global events and market dynamics. Others are more cautious, expecting continued volatility in the near term. They highlight the risks posed by geopolitical tensions, fluctuating commodity prices, and potential policy changes. This cautious outlook suggests that investors should be prepared for a bumpy ride in the months ahead. The ultimate direction of the market will depend on a number of factors, including the trajectory of interest rates, corporate earnings growth, and geopolitical developments. Investors and analysts alike will be closely monitoring these variables to navigate the complexities of the financial landscape and make informed decisions. Section 7 Deja Vu, 2025 versus the past. To gain perspective on the current state of the U.S. stock market, it's helpful to compare it to past trends. The period following the 2008 financial crisis was characterized by a prolonged bull market, fueled by low interest rates and quantitative easing. However, this period of easy money also led to asset bubbles and increased inequality. The 2025 market is different in several key respects. Inflation is higher than it was for most of the post-crisis period, and interest rates are rising. This creates a more challenging environment for stocks, especially those in sectors that are sensitive to interest rates or economic growth. However, it's important to note that every market cycle is unique, and past performance is not necessarily indicative of future results. Section 8. Where to put your money investment opportunities. In this uncertain environment, investors need to be selective and focus on companies with strong fundamentals, such as a solid track record of earnings growth, a healthy balance sheet, and a competitive advantage in their respective industries. Value stocks, which are companies that are trading at a discount to their intrinsic value, may also offer attractive opportunities. It's also important to maintain a diversified portfolio, investing across different asset classes, such as stocks, bonds, and real estate. This can help to mitigate risk and smooth out returns over time. Finally, investors should always consult with a financial advisor to develop an investment strategy that aligns with their individual goals, risk tolerance, and time horizon. Section 9. The bottom line. Key takeaways and final thoughts. The U.S. economy in 2025 is at a crossroads. While challenges remain, there are also opportunities for growth and investment. The stock market is volatile, but the long-term outlook for U.S. equities remains positive. Investors need to be selective, focusing on companies with strong fundamentals and a proven track record of success. By carefully navigating this complex landscape, investors can position themselves for long-term financial success.